All right, gents, to start us off, 2021 Q4 ended at 19.4% vacancy. 2022 ended at 19.6% vacancy. Not much of a change. Does that mean the market has been stagnant? What have you been seeing?
Yeah, so vacancy has increased by 0.2% year over year, which may indicate that not a lot has changed. However, we have actually been seeing a fair amount of leasing activity both in the suburbs and downtown. Year over year, the suburban vacancy rate has dropped by 3%. We've seen increased activity in the AA financial core, indicating the continued flight to quality from significant tenants in the market. However, at the same time, we saw a negative over 200,000 square feet of negative absorption in the government sector. The government has recently been going through a contraction of their office space and a consolidation of a number of locations. So the net absorption number, although maybe close to zero, we have seen significant activity over the last year.
Yeah, and to Scott's point, if a group's 10,000 and they move to 10,000, you kind of get a wash as you get 10,000 absorbed and 10,000 left behind, so it doesn't really change your vacancy numbers, but it does result in the transaction.
Tenants call us all the time and seem to think that office space should be so cheap because there's so much vacancy in the market. Is office space cheaper than it has been? Will, what do you think?
To a level, yes. When there's space like that flight to quality, some people are moving from A to AAA, so that space left behind is quite nice space, and so the landlord may not have to put a ton of capital into it, and so they can take it as is, and maybe they'll get a lower rate, which will impact our numbers. We're also seeing landlords trying to be competitive across the board, so rates, tenants will keep on pushing it, but now we're seeing pushback on the landlord side because costs of debt to provide these large TIs and inducements and build-outs, they can only go so low. So yes, we have seen a decrease, but we're almost seeing an increase on some different properties just given to the cost of construction.
So would you guys agree that cost of construction and building out new space is still one of the trickiest things that we're dealing with in new deals?
Yeah, it's definitely having an impact. Although rates remain low, like Will said, the total cost of relocating, doing a new deal with moving costs, new furniture, cost of construction isn't necessarily low relative to the past.
What are you guys seeing for some of the largest deals that happened in the market in Q4 and 2022 as a whole? Shane, Scott, and I were part of some pretty decent sized deals in the last few months. Scotty, can you touch on some of that?
Yeah, as mentioned, we assisted Bennett Jones with a 50,000 square foot lease transaction at Stantec Tower. We assisted Cashco Financial with a 13,000 square foot lease at Commerce South Office Park, and just completed a 40,000 square foot lease on behalf of Lloydsat Insurance Group at the Bell Annex building downtown. So there are some significant groups looking and moving in the market. As mentioned, there's a couple other groups looking at a few floors in Stantec Tower. And we expect this continue moving forward. The larger groups who are planning for their long-term office requirements are taking advantage of these existing market conditions.
Well, what are you seeing? You do, I think, a lot more deals in the suburban market. We often call you the king of Summerside around here. So what's going on?
Kind of in the Summerside market, we did quite a bit of renewals. We're around about 40,000 square feet in the past. Most of it is Q4, but we'll take it in the full year 2022. So that was more of a group's, not necessarily, they're comfortable where they're at. The market in the Summerside's tight, it's sub 10% of vacancy, and there wasn't great product to go to, but they loved that market, so they looked at it and signed on for a longer term.
What are some of the other bigger transactions that you've been involved with this year?
One of the really exciting ones was the one that was a former Stantec building. You talked about the sublease they're offering, but they moved out a building on 112th Street that a Rowett purchased. A big lease that came out of that one was 75,000 square feet with Covenant Health. They took the full north tower and some of the podium on the main floor. We have another big, larger tenant coming in at 22,000 square feet. We'll take 2 floors and the balance of the main floor. So it's a real positive story. I mean, they were sitting at 150,000 square feet vacancy. Now it's showing around 33,000. So, I mean, great story to show. If I was to focus on one thing as a landlord and make a recommendation to lease their space, it's presentation. It's a cost-effective solution. It's simple as much as mopping the floors, putting a paint of coat on, and just make sure the space looks nice. Tenants get worried when they see a rundown space they're walking into, even building. and they might think that's how the landlord's going to treat me, so they're going to look other ways.
When we've got 20 options that a tenant's trying to sift through and we're already narrowing it down, sometimes they're just looking for a reason to check that box and knocking off an option off the list. I would say amenities. We've been talking about it a lot, and still, if a landlord can invest in their building, amenities are going to drive tenants into their space. Tenant lounges, conference rooms, and fitness centers.